If you've ever applied for homeowners insurance or maybe tried to get auto coverage sorted out quickly, you probably know the drill. You send in your info and then you wait. Could be days, right? Sometimes even a week. Meanwhile, someone's manually digging through records, spreadsheets, all sorts of stuff, trying to figure out if you're a good risk. Well, that whole system, it's undergoing a massive change. Okay, let's unpack this.
Yeah, we're really shifting gears here. Moving away from that uh, older manual way of approving things to a process really driven by artificial intelligence. And it's not just about getting you a quote faster. It's about automating the really time-intensive bit, the underwriting. The aim is, well, faster, more consistent service for everyone. What we want to do in this deep dive is show you exactly how this AI revolution works. We'll get into the tech, the specific mechanisms, and also some, frankly, surprising stats about just how much faster things are getting.
Right. So for you, listening in, we're going to distill how these AI systems, using things like machine learning or ML, telematics data, even natural language processing, NLP, how they cut down that waiting time, but crucially, without losing accuracy. We really want to show the precise mechanics turning, week-long waits into decisions made in just a few hours. So let's start with the core problem, all that data. Traditionally, underwriting desks were just swamped, buried under it, and a person had to check and process every single piece, compare it against risk guidelines. It was slow. That was the bottleneck, wasn't it?
Absolutely. That's exactly the pain point that machine learning tackles head on. ML models, they're basically designed to ingest and make sense of huge, complicated sets of data almost instantly. For auto and home insurance, we're talking about blending the traditional stuff like credit scores, claim histories, where the property is with newer data streams. Think real-time telematics from your car, for instance. That's a ton of data.
Okay, so it pulls all that in.
Right. And the ML system doesn't just hold the data. It builds predictive models from it. These models can immediately assess specific risk factors. So it might calculate the likelihood of an accident based on driving habits it sees from telematics, or maybe potential storm damage risk based on property info and local weather patterns. It's this instant objective assessment that replaces that slower, sometimes subjective manual judgment.
Okay, that makes sense for the structured stuff like scores and location data, but what about the messy parts? Insurance applications often involve things like written reports, notes, descriptions, stuff that isn't just numbers in a box. How does AI handle that kind of unstructured information? A human used to have to read all that.
That's actually a really elegant part of the solution. It uses something called natural language processing, or NLP. NLP is a piece of AI that's specifically designed to, well, read and understand text that isn't neatly organized. Think reports, emails, inspection notes.
Uh-huh. Here's where it gets really interesting, because that seems like a very human skill interpretation. So if an insurer gets, say, a detailed police report after a car accident, full of descriptions, or maybe a long home inspection report with comments about the roof condition or the plumbing, how does NLP deal with that?
Well, the NLP scans that text. It's trained to identify key phrases related to risk things like water damage, prior collision, structural concerns.
Hmm.
It then synthesizes the main points and essentially translates that narrative information into structured data points.
Got it.
And those points can then be fed directly into the main underwriting ML model. So the system gets that comprehensive insight, that detail, without needing a person to spend an hour reading through everything.
So it's combining the number crunching with reading comprehension, essentially.
Exactly. That ability to ingest all types of data, structured and unstructured, is really the engine driving the efficiency. So now that we kind of understand the how, the mechanics, the next obvious question is, what does this actually deliver? What's the payoff for the policyholder?
Speed seems like the big one.
It delivers time back, definitely. And that's huge. We're talking about a fundamental shift in how long people have to wait.
Yeah, you're absolutely right. We're moving from talking about days of waiting to potentially just hours. The source reports we looked at have some pretty incredible numbers. Some insurers are seeing up to a 70% reduction in processing time. Think about that. A review that might have taken, say, 5 working days, now potentially done before you even finish your workday. That's a massive change.
It is. But that speed immediately raises a critical question, doesn't it? Are we trading quality for that speed? If you're pushing applications through that quickly, are the policies still priced correctly? Are you accidentally taking on more bad risks?
That's the concern, yeah. Faster isn't always better if it's wrong.
Well, what's fascinating here is the data actually suggests the opposite is true. Because the AI applies the same objective criteria consistently every single time, it removes that human element of variability. Decision fatigue, maybe an off day. AI doesn't have those. Source analysis indicates that these AI predictive models actually improve risk prediction accuracy. We're seeing figures up to 25% better compared to the traditional manual methods.
Wow, okay, so it's not just faster, it's actually more accurate at predicting risk.
That's what the evidence points to. Fewer errors, better predictions.
That combination, faster and more accurate, must have pretty significant ripple effects for the insurance companies themselves.
Oh, absolutely. When you slash errors like that and automate so much of the process, the operational costs for the insurer drop quite a bit. And that efficiency, well, it allows them to be more competitive on pricing. It kind of pushes the whole market towards offering better value because the underlying risk assessment is just fundamentally more precise.
Okay, so potentially better prices for the consumer. What else? Does it change the actual policy?
It can refine the final product, yes. That leads to the next big benefit, personalization.
How so?
Well, because the AI model has analyzed your specific combination of data, maybe your driving habits from telematics, the unique history of your property, those nuances pulled out by NLP from reports, the policy it generates isn't just a generic off-the-shelf product. It's tailored much more closely to your individual risk profile.
I see.
And this kind of hyper-personalization, it really boosts customer satisfaction. People feel like they're getting coverage that actually reflects their specific situation, not just lumped into a broad category.
Right, it feels fairer, probably.
Exactly.
So given these benefits, speed, accuracy, cost efficiency, personalization, it sounds like this isn't just experimental anymore. What's the adoption looking like across the industry?
It's moving fast. These measurable wins are really driving widespread adoption now. We saw data from a 2025 study, for example, indicating that AI-driven underwriting improved overall insurer efficiency by about 30%.
30% across the board. That's significant.
It's a compelling number, yeah. You can't really ignore that kind of efficiency gain. So it's really accelerating adoption in both the auto insurance world, which is super competitive, and also in the homeowners market, which can be a bit more complex. It's rapidly becoming the global standard for how these policies get underwritten.
Okay, so this is the new standard, but technology doesn't stand still. What's next? Where is this heading?
Well, the next big wave seems to be about deeper integration, making it even more seamless. AI underwriting is starting to connect more intensely with the Internet of Things IoT and with continuous real-time data streams.
Okay, explain that. What kind of data are we talking about?
Think about smart home devices, security systems reporting activity, water sensors detecting leaks, maybe even smart thermostats optimizing energy use, which could indirectly affect risk. Or for cars, connected vehicles constantly monitoring things like tire pressure, engine health, even road conditions encountered.
Right, that constant flow of information, that must fundamentally change things, surely. It's not just a snapshot at the application time anymore.
Exactly. That's the key future outcome we're moving towards. Policies that can be dynamically adjusted.
Dynamically adjusted, meaning the price or coverage could change after you buy it.
Potentially, yes.
Mm.
If your insurance policy is constantly receiving data from your connected home or car, the policy itself could, in theory, be updated almost in real time. So maybe you install a top-tier security system. The AI model sees the reduced burglary risk based on real-time data, and perhaps your premium adjusts downwards almost instantly.
Mm.
Or, conversely, if driving habits become riskier.
Wow.
If we connect this to the bigger picture, this level of integration creates a much more responsive insurance landscape. It's a move away from the traditional static contract you find it's fixed for a year, towards something more fluid, maybe even a living policy, one that's constantly trying to balance that high-speed processing with ongoing up-to-the-minute precision.
That synthesis really brings it together. So just to recap the core changes, AI automation using ML and NLP has brought these huge measurable improvements to auto and home insurance. We're talking massive time savings, up to 70% faster processing.
Yeah.
And alongside that, a significant boost in accuracy, up to 25% better risk prediction. The system is just fundamentally quicker and smarter. So what does this all mean, particularly for you, the person holding the policy?
Well, I think it means we're fundamentally challenging the idea of what an insurance agreement is. That concept has been pretty static for, well, centuries, really. But if your policy can genuinely be adjusted dynamically based on continuous data feeds from IoT devices and constantly evolving AI risk models, it forces us to ask a pretty profound question. How does the traditional definition of a fixed binding contract hold up in that environment? When risk isn't just assessed once a year, but potentially calculated hourly or even minute by minute,
Yeah.
how much certainty is there in that initial risk assessment made at the point of sale? It changes the definition of risk itself, making it constantly in flux. That's something really powerful, I think, for you to consider as you watch this technology continue to evolve.